find it surprising that I've been looking forward to this, because usually people look on appointments with me as a cross between meeting an undertaker and a librarian. But by way of introduction this evening, it's important that I emphasise that what I'm going to be talking about is largely generic, and as we'll go on to see as we go through the subjects, actually, and what I must do, because I just drone as we go through, I just want to keep an eye on the time so I don't keep you here all night. Taxation works very much on a facts and circumstances basis. So whilst we talk about generic issues this evening, do bear in mind that your own particular position could change or be different to what's described. But what I'm hoping to give you is some sort of conceptual framework within which to try and map out where you stand. But the actual result will be determined by your own activities and, as I say, your personal circumstances. Now, as some of you know, I used to work in the front office of an investment bank where I was actually dealing in OTC derivatives, and I was a tax lawyer before that. And what for me was interesting, I appreciate not for everyone, was the fact that derivatives are such an unusual contract, and certainly in the late 80s, early 90s, mid 90s when I was doing it, they were so difficult for the tax authorities to understand that we ended up with what I guess you'd understand as a fork, where you had one set of tax legislation for everything that everybody was doing in the normal course, and then suddenly the government realised that derivatives just couldn't be dealt with in this way. And what first attracted me to Bitcoin was not so much the fabulous amounts of money that people were making or losing, but more whether or not, as a lawyer, whether or not the features of Bitcoin were such that we were coming towards another sort of tectonic change in the way people look on, or the way governments frame tax legislation. Would Bitcoin introduce something which suddenly would give rise to a big explosion in the way that tax operates? And the reason I was interested in that is twofold. The first is that if you're the first to find something out and understand it and work out how it's taxed, then it's a good position to be in. But secondly, I genuinely am quite interested in law, so it was something worthwhile for me to try and follow. Now, the tax implications, as I've said, is of what you're involved in, is very much, as I say, a facts and circumstances issue. And I would emphasise that as we go through, what I'm talking about can't really be construed as advice. What I would say is it will help you, as I say, map where you might stand. But what you can't do is go out and make a decision on the basis of what I say from up here, because it's very important that the concepts that I'm talking about this evening are applied correctly to your particular circumstances. Now, talking about tax and anything is a bit like asking a doctor just to talk about health. It's a very broad subject, so what I've tried to do is gather together as much information as is relevant, and I hope that I will try and make it interesting as well. So I don't know, AMA, is that, who knows what AMA stands for? That's it. And who's heard of CREAM? Cash rules everything around me. It's Ghostface Killer has just announced. Well, he's announced some time ago that he's actually issuing cream coins to try and raise, I think it's $30 million to create cryptocurrency ATMs in the States. So, these are the areas we're going to cover. And to begin with, I think it's important that we all understand that HMRC, the tax authorities, are aware that people are making money out of Bitcoin. And this was a statement which you can find on the internet that echoes in many respects what I've already said to you, but it proves that they know you're out there. Okay? And so what I said, whether it's subject to corporation tax, income tax, or capital gains tax, that's what the initial stand for, depends on the activities and the parties involved, case-by-case basis of own individual facts and circumstances. And then they go on to say that in certain circumstances a transaction may be so highly speculative that it's not taxable. Now, the reason why they're prepared to admit that something may not be taxable, as I was saying just before we came in to somebody, is that it also means that if you've made a loss, you can't offset that loss against your other income. So there is a sort of, there's two sides to how transactions looked at for tax. Obviously, if you make a profit, it's taxable, but actually, under UK tax law, if you make a loss, you can offset that loss against your other income. So if somebody is doing something completely mad and they're bound to make a loss, then they're not going to, they're going to resist recognising that as an activity which can give rise to a legitimate deduction. Now, this statement, as you'll see, came out in 2014 when there were less than 5 billion cryptocurrency around. Now there's 150 billion. So it just goes to show that if they were prepared to put this statement out when there were 5, they're going to be looking more seriously. So HMRC recognise that transactions in Bitcoin can actually, a non-incorporated business means that you're operating through, on your own account, you're not operating through a company. So that's a non-incorporated business. That can be subject to income tax. And remember what I was saying about the fork, whether or not they would determine that the transactions were so unusual or different that we need some new sort of dimension to existing tax law. What they said is that actually it's taxable under normal income tax rules, and we'll look at some of those as I go through. Chargeable gains, well, if you're not trading in Bitcoin, then HMRC have said that it's likely that you will be disposing of an asset which is a chargeable asset, and therefore it will result in a charge to capital gains tax. Now, the most important message I can give you this evening is probably that in most cases, disposals of cryptocurrencies are probably going to be capital transactions, because you won't be trading, you'll just be disposing of an asset that you own. And therefore, although potentially within the charge to tax, they'll be within the charge to capital gains tax. But if the total gains that you make in any one year are under 11,300, you don't have a tax liability. And you don't even have to report the transactions on your tax return if your gains are under 11,300, but also the volume of transactions, i.e. the total amount of the value of the transactions that you've executed, the sales you've made, are under 4 times 11,300. So if they're under 45,200 and you haven't made a gain above 11,200, So I'm sounding really tax lawyerish here, but you know, you need to know this.
Does it reset every year?
Yeah, every year. So that is probably that will probably come as a bit of a relief to a lot of people here, because there are thresholds, and you need to be above those thresholds if you're going to be within in the scope to capital gains tax. So the next the next point to consider is whether or not your transaction is legitimately taxed as a capital transaction, which means that you own an asset and then you sell that asset and you make a gain, or whether the way in which you undertake your Bitcoin transactions is such that HMRC could take the view that you're engaged in a trade. And the difference is that if you're engaged in a trade, it's taxable as income, but if you're disposing of an asset, as I said earlier, it's taxable to capital gains tax. Now, an important point to bear in mind is that when you're dealing with the tax authorities, it's always more helpful for you if you have a view as to what it is you're doing and what the nature of what you're doing, how that should be classified. What you don't want is for HMRC to come to you and tell you what you've been doing. You need to take the initiative and have your justification for the position you're taking marshalled and ready. Obviously, because it's a facts and circumstances issue, then there will be an appropriate answer. But sometimes the circumstances aren't always that clear, and there can be very grey areas, and we're going to go on to look at why those grey areas can arise and how those grey areas may affect you. But as I say, the critical thing is to have your view of where you stand vis-a-vis, am I operating a trade or have I disposed of a capital asset, marshalled and ready, so that if you get asked the question, you've got the answer. And I would say this, wouldn't I? But actually, if the volume of transactions is quite large, then it really is something that it might be helpful to get some advice over. Just so that you've got the technical language and you know the types of arguments that HMRC are likely to throw at you. But you can find a lot of this stuff in the Inland Revenue's manuals. They publish manuals. There's a business income manual and there's a capital gains manual. And you can find a lot of this type of material in those manuals. But as I say, if your volume of transactions is high, then and you have made a lot of money, you should seriously think about taking advice. So the first question is the nature of your activity such that instead of being viewed as a business which gives rise to income, is the nature of your activity such that instead of being a capital transaction, which would give rise to capital gains tax, your activity could be viewed as a trade or a business? Well, the legislation, obviously there's tax law, tax legislation around the identification of a trade, but it's not that helpful. But what that statement says, any venture in the nature of a trade, is that an activity doesn't actually have to be a full-bodied trading activity in order to fall within the trading rules. It could be something that actually is just sufficiently closely associated with trading activity that it should be considered a trade. Now, that is a reference to the Business Income Manual. That is a reference to HMRC's own manuals, which their inspectors use, and they've had to make those public, so they're on the internet. Okay. Now, HMRC have given this guidance to their own people, to their own inspectors, as to when to view an activity as being a trading activity. And the ones that I've put in red are those which may push you in the direction of having a trade as opposed to transacting in assets that will give rise to a capital gains tax charge. So, do you have a profit motive? Well, they say in the manual, that intention supports trading. How many transactions have you entered into? Now, a lot of these are quite intuitive and commonsensical. You would say, oh yeah, that looks like a trade, doesn't it? And no one of these factors is determinative. Every one of these factors is indicative. And sometimes some factors will be stronger than others, but no one of them carries a particularly strong emphasis or relevance. It comes down to a mixture of these various issues. So the nature of the asset, is it of such a type or amount that it can be turned to advantage by a sale? Now, one of the problems with Bitcoin, not problems, one of the features of Bitcoin is at the moment, it's not quite the same as, say, the dollar or one of the fiat currencies, because most people don't trade in those currencies. Most people buy those currencies to go on holiday or to buy a property overseas. They don't actually buy on them and sit on them. Now, there are people who do, I'm aware of that, and investment banks do on their dealing floors, but most people holding Bitcoin aren't holding Bitcoin for the same reason that most people go to the post office and buy euros. They're holding Bitcoin not because they really want to use them as a legitimate currency, in my view. They hold them because they're expecting the value to go up. Now, you may disagree with that, but that's just my observation of the people I meet and talk to. So this actually is quite an important issue. The Bitcoin doesn't give you pride of possession. These are quotes from cases, tax cases, where the courts have decided whether somebody was engaged in a trade or not. Now, you can look at those relevant criteria, and some of them will be relevant to you, and some won't. But when it comes to a spat with HMRC as to whether or not what you've got is a trading activity and therefore within the scope of income tax as opposed to capital gains tax, this is where they'll start, these criteria. So tax, like all other law, in my experience, is probably about 20 to 30% law and 70 to 80% facts. It really matters to be able to evidence what you've done and why you've done it. So if you are engaging in investing in Bitcoin, anything you can produce that or keep that helps you prove your position vis-a-vis these criteria is going to be important to hang on to. Okay? So, let's just say that you do fall, I was going to say the wrong side of the line. I mean, there isn't a wrong and a right side, it's a factual issue. Let's say you fall over the line into operating a trade. And some of these questions, when I was last amongst you people, some of these were questions that I actually got asked. It's a bit like being a doctor at a party, you know, when you just get asked, I do actually at parties get asked quite often about people's tax issues and their tax returns. It's like astonishing. But anyway, let's say that you do end up engaged in a trade. These are the issues that you need to consider. But first of all, it's the basis of accounting. How are you going to show what your profit is? Are you going to be in a position to actually produce a set of accounts? And if you can produce a set of accounts, how are those accounts going to disclose how much money you've made? Now, most of you, I think, when you look at your Bitcoin wealth or your cryptocurrency wealth, will do it on the basis of what's called mark to market. You'll look at the current value of the assets that you hold by reference to, I don't know, are they on Reuters screen? Where do you get your quotes from? But I mean, you'll get your information from a screen somewhere, an external source that gives you what the value of your Bitcoin is. Now, if you're preparing accounts on that basis, there are going to be fluctuations by reference to the market. Now, what can happen is that you end up being taxed, not by reference to transactions you've undertaken, i.e. sold and purchased, but by the value of what you hold, and that's called mark-to-market accounting. However, you do have the option to account for your transactions on the basis of what's called cash accounting, which just means you show your profit and loss account by reference to stuff you've bought and stuff you've sold, i.e. the actual cash coming in and the cash going out. So it will be necessary to determine which of those two is going to be relevant, which of those you're going to use. Appropriations, what I mean by that is that if you have a fund of Bitcoin and you suddenly need to pay your tax lawyer for the splendid advice he's given you, if you use Bitcoin to do that, then if you're trading, the amount of Bitcoin you take out of the trade is viewed as being a disposal for tax purposes, and it's a disposal at the value that the Bitcoin were taken out of your trade. And just to give you some indication that these issues have been around for centuries, this principle is based on a tax case called Sharkey and Werner, where a titled lady ran a business of stud farming and took one of the horses out of the business for her own pleasure and enjoyment. And she claimed that she should only be taxed on what she paid for the horse. But it went to the court, and the court said, no, you're taxed on the value of the horse when it left your business. Okay. Now, this is quite a difficult one, and I actually took a straw poll of colleagues on this, because I know it could never happen unless you're DAO, but actually suppose your encrypted currency does somehow evaporate. Well, one would hope that you would be able to claim that you'd lost profit to the extent that you were the victim of fraud. But I would say that HMRC will challenge that. They will say, how much money had you made from your activities? And when the fraud happened, well, that's nothing to do with your business. That's nothing to do with your trading. That's just somebody stealing your car. It's nothing to do with the trading activity. The fact that you're trading in this stuff and you have a fund of it, and then somebody nicks a bit of it, doesn't mean that actually you can claim a tax deduction for the loss that's arisen from what you suffered. Now, this isn't clear cut, and tax is a funny subject in as much as it's all based on self-assessment. And when you come to self-assess, what you put down matters, but you have to have what's called a filing position, which means that you've got legal justification, or there's a good basis for putting what's on the return. Now, I was trying to think whether I could get to a filing position, even though I didn't agree that it was 100% sort of slam dunk. Could I get to a filing position that a fraud loss should be a tax-deductible expense for a Bitcoin trader? And I was moving to the position where I probably could, but it's not straightforward. So just bear that in mind, that you might make a lot of money from trading in Bitcoin, then somebody cracks the encryption and you lose a load, you may not get a deduction for the loss, but you could be taxed on the profit. Now, as I say, that's something that I would have to spend more time agonising over if I got a real one, but I just want to raise it as an issue. Mining, I think that the position is that if you make money from mining as part of this activity that you're undertaking, then you would actually, I mean, has anybody ever mined a cryptocurrency?
Or mining contract, which is a bit different, but
okay. Then I think that all of the consideration you get from the mining would be within the scope of tax. Loss utilisation, if you make losses from your trade and HMRC agree that it is a trade, then you can offset your loss against your other income. So for some of you, you might have a job at the university or with an IT firm, and you pay Schedule E income tax, their PAYE. You can offset losses of the trade against your other income. So if HMRC accept that it's a trade and that you've made losses, you will get tax relief for that loss. Now, you may or may not remember that at the first few slides you were talking about the HMRC press release or statement that they set out, and they talked there about gambling. Now, the reason HMRC are not keen to identify gambling as a trade is that people are just as likely to make losses as profits, and therefore they have to give loss relief against other income for losses people make in the course of gambling. So again, there's been quite a lot of case law as to whether or not somebody's gambling activity amounts to a trade. And the infallible ones have come up with statements like this, where they try to define what a bet is in order to distinguish it from a taxable transaction. Now, I think if you are trading in Bitcoin, it would be quite hard to argue that you are gambling, particularly because it's quite a sophisticated activity. But there is precedent for saying that is an activity so habitual, systematic as to constitute a trade. Well, from what I understand of, and I'm not a user myself, but from what I understand from people who are, it is actually quite a systematic transaction. There is quite a lot of, you need to know a lot to be involved in this space. So I think the chances of the activity being viewed as gambling are not high, but actually HMRC do say in that extract that I read from, that it's possible that something could be viewed as a gambling activity. Now, we talked earlier about the badges of trade, and just to give you some sort of indication and to reaffirm the fact that these issues have been around a long time, which is why this isn't really a fork in the tax law. HMRC are just going to treat you guys the same way as, for example, they treated the guy who, after the Second World War, bought a load of parachutes, cut them into knickers and sold them, and claimed that he wasn't trading. He claimed that it was not a trade because there wasn't enough substance in what he was doing to actually constitute a trading activity. Or do any of you know the comedian Norman Wisdom?
Yeah.
Have you heard of him? Yeah. He bought a load of silver and then sold it at a profit and claimed he wasn't trading. He claimed it was an investment, and this was in the days where there was no capital gains tax. I'm sure he didn't do that of his own initiative. I'm sure he was advised to buy silver as an investment. But again, my recollection is that he was found to be trading. So, but then HMRC had a lot more incentive to fine people trading because there was no capital gains tax. So, capital gains as opposed to income tax, the difference is, of course, first of all, you only pay capital gains tax when you make a gain, and in order to make a gain, you've got to sell something. So capital gains tax is based on the realisation basis, as opposed to potentially a trade being taxed on a mark-to-market or accounts basis. The second feature is, generally speaking, you have to match costs against receipts. Now, something I should have said actually vis-a-vis trade is that, of course, you are taxable on your trading income, but you also get a deduction for your trading expenses. So what you would also have to do if you decide you are on that line of the capital trading divide is identify what expenses can legitimately be deducted against the profits you make. And there may be issues like computer costs and travel expenses if you've had to go to get advice on how to get taxed, and other business expenses that you're going to incur, then you would need to keep a record of what costs have been legitimately incurred in the course of undertaking your trading activity. And there is a rule that if your expense has a duality of purpose, so for example, I think there was a case where some guy went on a conference to the States but also took a holiday on the same trip, where that was found not to be a legitimate business expense. Whereas if you have an expense that's easier to sort of segregate into business, non-business, so how many miles on your car, how much time on your computer, how energy bills, how much you can legitimately split them. There would, but for the business, the bill would have been smaller. Whereas the guy's gone to the States, or the air flight was going to be the same, whether he went to his conference or didn't. But in circumstances where your bill is going to be different because you are undertaking your trading activity, then in those circumstances you can attribute some of the expense to your business. But anyway, back to capital gains tax and matching of costs and receipts. I understand that with some cryptocurrency you can link a unit you've bought to a unit you've sold. So you know when you sell a unit which unit it was. So you could say, well, I sold this unit for 100, but I know that unit I sold I bought for 50. But in other cryptocurrencies you can't do that. So that gets quite difficult, because then how do you actually match the receipt against the expense? Now, generally speaking, HMRC are prepared to take quite a pragmatic view of these things, and I suspect that where something is fungible like that, there's a good chance that you'll be able to pull costs. So you'll just average out the costs of what you hold. Now, going back to the circumstance in which you are undertaking a trade, another question I often get asked, so this is on the income side as opposed to the capital side, is should I do this, should I undertake this activity on my own account, or should I set up a company to do it? Now, the reason why this is very complex is because there are a number of different factors that input. Now, I'm afraid the slides are a bit wonky, but there are a number, and I haven't set this out in any great detail. I just wanted to give you some sort of mapping of the considerations you'd have to think through. So what I've got here is just an example of a guy who runs a company. He takes some money out as salary. Let's just say, I think in this example, he took out about 50,000 quid as salary, but then he's ended up with profit of 100. He has to decide, or she has to decide, whether that 100 is taken out by way of a dividend or by way of a bonus. And so the issues that would be relevant is employers' national insurance and corporation tax if it's taken out as a bonus, because if the money's taken out as a bonus, it's a tax deductible expense. If it's not taken out as a bonus but taken out as a dividend, it's not a tax deductible expense because it's not an expense, and therefore there'll be corporation tax, which is currently 19%. So you come down to these figures, but if it's taken out as bonus, the income tax liability on either a dividend or employment income is different because dividends are taxed differently, and if it's taken out as a bonus, you have employers' NIC as well. So I don't expect you to walk away from this knowing exactly at what level of income or profit it's going to be beneficial to set up a company, and then whether or not you take the money out as income or as a salary or as a dividend. All I want to do here is try to give you some sort of understanding of the calculations you would actually have to go through, or you would want your professional advisor to go through in order to decide what is the optimal way of taking your income out. Now, here, of course, I'm talking about a situation in which you have set up a company to do this, and you're deciding whether the company pays you a bonus, salary, or a dividend. Unfortunately, in the series of slides that I sent, which we don't have, I did actually go through the issues you'd need to consider if you were going to just not set up a company but do this on your own account, and the transaction was viewed as being income, not capital. And those issues are that you have a personal allowance of 11,500, so anything up to 11,500 you don't pay tax on. Then the first 32,500 is taxed at 20%. The next 116,500 is taxed at 40%, and then over 150,000 is taxed at 45%. And then you've got class 4 national insurance, which you'd actually have to pay. So if your level of turnover in Bitcoin or cryptocurrency transactions is reaching a significant threshold, you do want to think about, is it going to make more sense to put this in a company so that I have more flexibility as to how I take the money out and how and when I recognise the income. Now, as I say, you can see from the examples I've given that it's going to be important to get that evaluation done properly. Now, something that might be on your minds is, well, if I have undertaken these transactions in Bitcoin or any other cryptocurrency, do I have to tell HMRC, and when do I have to tell them? Well, you'll remember that I said that if it's a capital gains transaction, you actually have to, you don't have to file a return if you're below 11,300 and your total volume of transactions is below 4 times that number. But if you're not, there is a similar sort of threshold transaction level for income tax. If your trading income is below £1,000, you don't actually have to disclose it. But otherwise, you actually are supposed to give notice of chargeability to income tax or capital gains tax 6 months from the year and end of the year of assessment, which is the 5th of April. And there's a rule that if you are self-employed, i.e. you are running a trade, you have to tell HMRC of the fact that, so the 6 months from the end of the year of assessment is when you have to tell HMRC that you have done something that is in the scope of tax, okay? But if you actually are undertaking a trade, then you have to give them notification of your self-employment by the 5th of October in the 2nd year of the business.
What if you had tried to apply and it had failed? As in they had told you that it wasn't viable, it wasn't a viable business. So you
well, if you tried to tell them and they said that, then you've done. I've never had that situation, but I would assume that if they're telling you that it's not a business or they're not prepared to accept that it is, then I would ask them what they think it is. If they think it's a capital gains transaction, you still have this obligation to notify 6 months from the end of the year of assessment. If you have a letter from them that says, we think it's gambling or tantamount to speculation and therefore not within the scope of tax, that's fine, you've got your letter. The trouble is that if the scope or nature of your transactions changes significantly, then that letter is written on the basis of facts they know. So if your circumstances change, then it may not be the letter you have may not apply to your changed circumstances.
Mm-hmm.
And the maximum penalty that you can incur is the tax not paid by the following the 31st of January, from when you should have actually given them notification of your chargeability. Now, penalties, generally speaking, are negotiable, and there will be mitigating circumstances. I mean, if they don't always charge the maximum penalty, they will take cooperation, voluntary disclosure, those types of things into account. So, that's just a timeline. 5th of April, the end of the tax year. You need to give notification of chargeability by the 5th of October, and generally speaking, you pay the tax by the following 31st of January. Now, this is boring but quite important. The tax legislation says that you do actually have to keep all such business records as are relevant to determine your taxable income or gains, and there are fines for the failure to do that. I think there's a maximum fine, I think it's £3,000 for every incident of a failure to keep an appropriate record. HMRC, if you submit a return and HMRC decide that it's wrong, they can just correct it. Now, you don't have to accept that correction, but they can just correct it. If you don't accept the correction, then the gloves are off and you enter into a dispute with them. But what they can do is issue a discovery assessment. They can issue a discovery notice which can assess you to tax, and the amount of time they have depends on whether or not your failure to notify or your failure to disclose was careless, deliberate, or neither of those things. So they can go back 4 years if you were neither careless or deliberate, 6 years if it was a careless error, and 20 years if it was a deliberate error from the end of the relevant tax period. So they do have those powers and they do use them. If HMRC are going to make an inquiry into your tax return, they have to do it within 12 months of the filing date. But if you file late, then they've got first quarter of the first quarter day following the first anniversary of the date the return was actually handed in. We went through that. So that's a sort of whistle-stop tour through the parameters and the mapping that you have to do with regard to tax. I'd be very happy to take any questions, but you've all been very patient, and I hope it was helpful.
Yes.
So, if you've got any questions, I do mention VAT. It's unlike, I mean, if you're above the VAT threshold, then, which is about 85,000 quid, I think. So if you're making sales above 85,000, potentially you could be within the scope of VAT. But I think transactions in Bitcoin, it's been to the European Court actually. Transaction in Bitcoin are exempt from VAT, so you don't have to charge VAT. But it does mean you can't recover VAT on your expenses.
I have a question about, don't ever really intend to sell Bitcoin, convert it into fiat, but you're just going to spend it. What is the implication of that? So
well, I think, in that circumstance, I think it's likely that you would have a capital gains tax asset there, because you're not buying and selling as such. You're sort of just buying it and using it, almost like you would an asset. I mean, HMRC take the view that Bitcoin is a currency, and therefore it should be taxed in the same way as a currency, and currency, that is how a currency would be taxed. So I think in those circumstances it's likely that you would be viewed as holding an asset which you then disposed of in parts.
But you said basically capital gains is not relevant until an asset's actually sold. He's saying he's going to keep hold of it.
Yeah,
So
he said he's going to keep hold of it till he uses it.
Yeah.
So at the point he uses
Right.
it, he's made a disposal.
So if I buy a coffee or pay a bill there to do something,
that's right.
like
Yeah. That's a disposal. Yeah.
How can that be disposable as a currency? It's
Well,
like if I go to New York and I take $100
Yeah.
and $100 in Bitcoin,
Yeah.
I spent the Bitcoin.
Yeah.
They're going to tax me on spending the Bitcoin
Well, it depends.
because that's holiday spending, isn't it?
I think
that's where he's coming
if
from.
you're under your sort of capital gains tax limit for that year, so you've got a certain
Yeah, yeah.
allowance, right? So
Well-
if you buy up to sort of £12,000 worth of coffees, you don't have to worry about it. If
Yeah,
you
yeah.
go above that 12,000,
Well,
then you
no.
have
The
to
other thing is
do
there
every
is
transaction.
an HMRC practice, I think, or it may even be in legislation, that circumstances in which currency is bought for your own personal use. So for example, the reason why if you bought dollars to go to the States, went to the States, and then bought a Starbucks with it, and the exchange rate had moved in between you buying the dollars and you selling them, because the currency is for your own personal use, then it's not viewed as being a chargeable asset. But in circumstances where you buy, I think it's hard to see circumstances where you could say Bitcoin is being bought with the object of your using it for in a specific circumstance. I mean, it's one of these situations where it's a sort of halfway house between the woman who took the horse out of her business and somebody who buys dollars to go on holiday in the States and then spends them in the States. why have you bought the Bitcoin? You bought them with a view to benefiting from their accumulation in value. That looks like the acquisition of an asset. Now, the fact that you've then applied that asset in buying things is a bit like me buying an expensive painting, it going up in value, and then me wanting to sell it, but instead of selling it, saying, look, I'll tell you what, you give me that Lamborghini and I'll give you my picture. You've disposed of it and you've acquired
a lot of
something in
people
return.
in the Bitcoin space believe in it as a form of cash where there's no bank. So it's I think it's a lot of people buy it like they're putting money under the mattress because they don't trust the banks, they don't trust the system. It's like, and it feels like they're buying say dollars. Well, they don't trust their home currency. They're buying dollars and they're putting it under the bed. So,
but it's the same as me saying, well, I don't trust. I don't trust. I think the banks are all going to go bust, and therefore I'm going to put my savings into I'm going to buy a flat.
But it's like getting cash. It's a hedge against.
Yeah, I know, but the point is that the cash is a chargeable asset. The only circumstances is when it isn't a chargeable asset, is when you're applying it for personal use, and the view that's taken as the meaning of that is where you're acquiring it with a view to spending it pretty soon afterwards. Whereas in your case, what you're saying is, you're an anarcho-capitalist and you and you just don't want to be involved in this system. And therefore, what you're going to do is buy this stuff, hang on to it. Now, that is viewed. I mean, you have to go through it in steps. First of all, capital gains tax is charged on chargeable assets. Okay? In order to be subject to capital gains tax, you have to own an asset that's within the charge to capital gains tax. Currency is. Yes, so that's the first tick. So you own an asset that is potentially within the scope of the charge to capital gains tax. Step 2 is, I do own this currency asset, but am I holding it for my own personal use, or am I holding it to profit from the fact that it's going up in value? That is where it gets more difficult, and I think that most cryptocurrency users, and I said this right at the start, most cryptocurrency users would find it quite hard to say that they weren't doing this for investment as opposed to buying the Bitcoin in order to utilize the currency just for their everyday living expenses, like when they were on holiday. So I think you will find that you are outside the scope of the exemption for currency for personal use. I think you will find that what you have is a chargeable asset.
Would you get taxed for, when you bought that coffee, would you get taxed for the whole amount of money the Bitcoin has gone up in value since you bought the Bitcoin? Or would it be on the whole value, right?
Yeah, well, on the difference between what
only on the value of the coffee itself?
Yeah, on the value of the difference between
Purchase price.
the purchase price of the coffee and what you paid for the Bitcoin.
What would be the point in using Bitcoin on holiday then?
Well, I don't know. I mean,
So what I'm thinking is, it's like a test. Isn't it a test? So say this gentleman, he went to a Forex place, yeah, and he said, right, I'm going to New York. I'm going to take $100, right? I'm going to buy $100 of Bitcoin because I want to see how it works and just have fun with it. Then that's a test of like, well, he's bought it just before he goes on holiday at the airport from his Forex exchange. He's gone on holiday, and the test is he's not using it as an investment. If it spikes up in value by tenfold, I mean, that's something else. But if it only spikes up by 10%, that's
right.
negligible.
And I think what you have to bear in mind is that HMRC aren't really interested in wasting time on collecting small amounts of tax. You've got your 11,300 of gains that you have to make in a year before you have a chargeable gain. So, I mean, we're talking about buying coffees, it sort of trivialises it really. What about if you actually use your Bitcoin and buy an apartment.
I'm saying more like the example would be pay the builder to. I said I want to do an extension build, and I'm going to pay the builder in Bitcoin.
The appropriation of the money, the use of the cash, would be a disposal of the currency.
One other question. No,
It's all right, ask all the questions you want.
Can you split capital gains tax over? So you've made the gain over several years. Can you use the allowance?
No,
for each year?
it's the year of disposal.
Oh, what? Sorry.
Is that for everything?
There's no longer table relief and things like
Well,
that.
there's
is there?
no, there's no.
That's all
table
gone
now,
though, isn't
yeah.
it?
Yeah.
When was that changed?
Years ago.
How many years ago?
Well, no, I mean the thing is you don't get taper relief. So if
No,
you,
I know. It's to do with a different.
Oh, okay.
So you have to make sure you use your allowances and every tax year then.
Yeah. I mean,
Even if you just pop out and back in again, utilise
that's
that tax
yeah, you
allowance.
have to be careful with that
Okay.
because it's bed and breakfast. HMRC take a very dim view of trying to avoid tax in that way. And the other point to bear in mind is that if you keep doing stuff like that, you might find you could end up being labelled as trading. So,
What happens if you have a miner who trades?
I think if you're mining, I think
No, a miner, a youngster.
Oh, the tax position of people under the age of 18 is just imputed to their parents. So.
That's definitely slavery.
Can I have a different answer?
Can I just ask a question with regards to a lot of people here, because obviously it's not the easiest thing to do, but a lot of people will help family members, you know what I mean? Because obviously insofar as helping them buy Bitcoin and the likes of, insofar as actually that asset's concerned, obviously is that you want to make sure that for tax purposes that asset is owned by that family member and not the individual that's actually doing the trade. So insofar as do they have to set up their own separate accounts on the exchanges, or can they basically, if you can prove that they transfer fiat currency from their own account to your account?
What you want to try and prove is that you're a nominee holder. So if I give money to you and you buy Bitcoin with it, then there is a presumption actually that you're a nominee, because why would I give you money? Now, with husband and wife, there's something called a presumption of advancement, which means that they do, if the husband gives money or the wife gives the husband money, there is a presumption that they like each other, and so they're giving each other money, and therefore it's legitimately changed hands. But there is a presumption that if I give unprompted money to you for no reason, and you go out and buy something with it, that you've bought that on my behalf, and you're a nominee and I'm the beneficial owner. So that none of these situations are ever clear cut. I get these issues coming through my desk, all week, and it's always down to the facts. It's always down to what actually happened, and that's why it's often best to know what you're doing in advance, so that you know what the consequences are of what you're proposing to do.
If I were to invest in Bitcoin and say after a couple of years I go and buy a property in France, exactly the same as if I just bought euros directly. Is there any difference in the process, in the tax sense?
Well, the situation is that your cost for tax purposes would be the sterling value of the Bitcoin at the day you bought the property. If you bought the Bitcoin, held on to them, and then disposed of them,
That'd be capital gains.
that'd be capital gains.
Is it?
When you in hedging with the volatility of Bitcoin, if you're hedging with gold, does that have a?
Yeah, if you start hedging stuff, then you are looking like you're trading, because
But is that because if you Is it different touching gold as opposed to touching currency, fiat currencies?
Well,
with regard to your tax.
Yeah, I mean, all a hedge does is minimise the risk or reduce the risk. So if you've bought something and you enter into some form of strategy whereby you collar your risk through using whatever type of hedge you think is appropriate, then in those circumstances it begins to look a lot like a trade because it begins to get quite sophisticated, in which case I think you'd be subject to income tax.
Gold and silver, what's the tax status of those?
Yeah, they'd be the same.
Oh, exactly. Okay. That makes sense.
I'm drawing up some accounts at the moment, and I've switched between cryptocurrencies at various points. So I'd like to sell Bitcoin for Ethereum. For the purpose of my accounts, I've counted that as a chargeable, as a kind of taxable event. So even if you're not going back to fiat, switching between cryptos, that's a taxable event. You work out the gain.
You convert it back into sterling, and then that's right.
So if you switch between those cryptocurrencies,
That's a disposal and acquisition.
And if you, from a capital gains tax point of view, if you move abroad and you stay there for 5 years...
those days are over.
Stay in.
It's got a lot more. It's got a lot more complicated. That the rules are so complicated that I won't bore you going through them up here. If you do have an issue like that, and you do need to speak to someone, or if you're thinking of doing that, it's got a lot more difficult, particularly around people who go away and come back again.
What powers the HMRC have to find out what cryptocurrencies individuals might be holding? How are they going to find out what you've got?
They can issue notices where you are. I've had situations where they've asked for all sorts of stuff from people, and they are very determined to get it. And you can incur a daily fine for every day you withhold the information. They have a lot of power. If they think there's tax at stake, they can pretty much ask for anything. And I've been in situations where a taxpayer has disputed that the information they were asking for had any relevance to what HMRC were investigating, but they still were pretty dogged in their determination to get it.
You know that, what's it called, tax avoidance, and what's the legal one?
There is
tax
avoidance.
Tax evasion. Tax evasion, yeah. And so if someone trades on a decentralized exchange, which is untrackable, because you're going for a VPN on a third-party country, but you also you're also using somewhere else, but you're based here in the UK, then they're not going to crack it, are they? Really?
They're going to come and cut your toes off.
Well, they can try, but they're not going to find anything.
No, I seriously.
And then you just jump into a private hardware wallet.
Would recommend you don't even think about it.
Well, I was telling you, like,
they have
I'm saying
very.
my friend.
Well, unless of course you want to enjoy your Bitcoin in prison.
They haven't got enough tax people to go and basically check on everybody. They're cutting the numbers of tax people, so basically it's a joke, really.
I don't know who you get your tax advice from, but that really isn't the basis on which you want to plan.
I'll tell you what now, tax is not everything, mate. That's why most of the people in this room have gone peer-to-peer with Bitcoin.
But then why are we all here?
We're open-minded people, aren't we? We're open-minded.
At the next round of cuts in social welfare, we know who to blame, won't we?
We've already got it, mate. Basically, I've just applied for my pension, and the national insurance contributions are a joke. It's a crime what they're doing with national insurance. All right. If I was anybody, basically, once you've done your 35 years, don't pay it because you won't. You know, the pensions are going down and down and down. So
they're not going to get pennies.
I just want to ask: are there any examples where somebody has said that all of their gains from Bitcoin have been purely gambling in the UK?
I'm
Because
not
it's so speculative, there is a case to say it's purely a gambling game.
Yeah. Unfortunately, as the gentleman rightly pointed out, that HMRC is staffed by individuals, and what one person may accept as a legitimate argument, other people won't. Now, sometimes an issue will go to the core of something such that there'll be policy around what they can agree and what they can't. The fact that in the notice they talk about gambling indicates that they are sort of open to the idea that it could be relevant. But I've never known of a situation, not just Bitcoin, but pretty much anything actually, where somebody's claimed that it was gambling and therefore wasn't within the scope of tax and won.
What about mining?
Well, mining, I think,
mining is gambling.
Well,
it is, because you've no way of knowing whether or not you're actually going to get any Bitcoin. You just
no,
don't know.
but I could say that. I could say
probability.
No. I don't agree. I think what you're doing is applying algorithms and electricity to try and earn a profit. Now, it may be.
But you might not succeed.
Well, no, but
that's true of starting a business.
Yeah, but I mean, it's true of any business. I mean, you know, it's.
And also doing that and putting, putting $1 in a.
There's a huge.
It's not merely a rational agreement.
There's a massive
rational. It's a rational.
No, it's probability.
Yeah, it's not.
Well, I tell you, if I end up in the tribunal, I hope you're on the other side. There's a massive difference because of the infrastructure that's required and the nous you need to actually undertake a mining activity.
Well, yeah.
I mean, it's
not if you did it 7 or 8 years ago.
Well,
even then, anyway, all much computing.
Anyway, my view is you are likely to be viewed as trading. Now, something I do quite frequently is try and get a view from HMRC. But what we would do is present them with a set of circumstances and say, we're going to treat it this way, do you agree? Now, that's something that we can try and do. They don't always agree to do that. They don't always say, they will sometimes say, no, you submit your return, we'll have a look at it and we'll tell you then. But in circumstances where something isn't clear or there is ambiguity in the legislation, then they will give a view. Mining, I would have thought, if you're mining and, I was going to say trading, that's sort of, but if you're mining and transacting in Bitcoin, I think you're likely to be viewed as trading.
Well, I just mined years ago and then lost them.
Well,
then you found them in the sofa.
If you mined them years ago and lost them, have you not really lost them? No, you're just pretending you've lost them.
No, I haven't lost them. Found them. No, I did lose them.
Yeah, and most
lots of people have done that. I mean, that's a realistic example. Lots of people have actually done that.
Yeah,
they found the old hard drive that had the original Bitcoin.
No, I understand. I understand the situation. I think it would be quite hard to allege that wasn't a trading profit or
investment.
Yeah, but it could be. It could be viewed as if you did something and then stopped.
Yeah.
For a long period of time and then found it again. I would be more comfortable with the assertion that that's an investment than a trade.
I mean, at the beginning you may have covered it, but have there been test cases with HMRC?
On Bitcoin specifically? I'm not aware of any.
Or in other Western countries?
Well, the US take a different view of Bitcoin. They tax it differently.
I read that only about 9 people have paid any tax on Bitcoin in America.
Yeah, that's very possible. Yeah.
I don't think anyone has here.
What happened? Well, we don't know.
Magic.
What you could do is, if you're a hot shot trader, but no one's going to declare it in this room because there's too many losers here like me, then you would end up going to a tax-free place, so they're probably not even in this room, and then you would trade there, tax-free or work around it. You have all the money coming in there, earn it as a wage or whatever you can legally there, and then you come back to the UK, which is nice and warm.
So you
But
can
why
only
would you want
spend
to
90
anyway?
days in the UK then, can't you?
Yeah, there are quite
What, is it
tight
90?
rules around doing what you've just described.
But it can be done.
Second passports, that sort of thing.
Well, what HMRC do is ask for your bank account details. They will look at what you spend money on.
What, over there or here?
Well, let's just keep it here for now, okay? Just to give you an indication of how they work. They will give you a blank sheet of paper and say, write down everything you've bought this year. And then they will say, we have your bank accounts here, and you don't seem to have a tenth of the money you've spent. So where's the other 90% come from? And then if you say, I'm not telling you, then that isn't a brilliant position to be in. But they will actually look at your house, your car. They're quite canny when it comes to, they have people trained to actually undertake capital evaluation statements where they look at the money you've spent and the money you claimed that you've had in, and then ask you to reconcile the difference. And if you can't, then you're staring at a big hole in the ground, really. I mean,
what happens in the case where?
Well, if
you're a hotshot trader in another country where you can get it tax-free as a British citizen, and you can come back for 30 days and drive your Lamborghini around with the Emiratis, no problem.
Well, there was actually a case. I'm pretty sure there was a case where HMRC actually pitched up at Ascot. I mean, this was like 2 generations ago, but they pitched up at Ascot to catch all the people who claimed that they weren't actually resident in the UK. So, as I say, whether or not you qualify for exclusion from UK tax on the basis of your residence or domicile, or you don't, is quite a complex issue. But what I don't recommend is you playing around with it without understanding what you're doing, because a lot of people come unstuck. This week I've had someone who's come unstuck big time, which is a shame because he's just bought a new Porsche. I really wouldn't recommend that.
What about insofar as transferring Bitcoin, insofar as put it in trust, like so, with regards to planning going forward for your kids?
Yeah, that depends on, you can use trusts, again that's quite a complex area, and trustees pay tax as well as individuals, so trustees pay tax on profits and gains made in the trust. There are different types of trust, and it depends, the outcome will depend on the type of trust you use, because if you are a beneficiary under the trust, and you basically haven't done anything, have you? You just transferred it to trustees, but you can still benefit. But if you transfer it to a trust that has beneficiaries other than you, your spouse, then it may be that there can be some tax advantages in doing that, or you can transfer it to a discretionary trust, which means that there's a bunch of beneficiaries, but the trustees decide who gets what ultimately. And each one of those types of trust has a different outcome vis-a-vis the tax implications of what you do. So you can look at putting Bitcoin into a trust, but you can look at putting any asset into a trust.
You just give it away. Is that a disposal?
Well, yeah, I was thinking about something similar. I was thinking so if you've got a Bitcoin wallet, and you pass and you put from $1,000 or pounds into Bitcoin, you make money from that Bitcoin, and you pass the extra Bitcoin that you made from trading to a different wallet, can they actually see that that wallet had trades? If you're going to get that money out of the wallet? Would the other
I
wallet
think perhaps
be-
I haven't made this clear enough. The whole UK tax system is based on self-assessment. You self-assess. You tell them. They don't have to come and ask you. So, if you actually do something which makes a profit and you don't tell them, that's where your problems start.
So if you have two wallets, and only one is your exchange, and then there's a private wallet that you never use, in a way, and you pass your Bitcoin that you make to there, they will have no way of knowing if you net actual money or not.
Well, no, never, ever, ever think they have no way of knowing, because that is, they may not, you could be right, but that isn't the basis on which you want to undertake any sort of tax planning, because you will come unstuck. You know, and also morally it's wrong. But I mean,
aren't there allowances for gifting to family members?
Well, it depends on which tax you're talking about. There's allowances for inheritance tax. There are certain circumstances in which you can gift assets for capital gains tax, but as part of the capital gains tax legislation, which talks about transactions not at arm's length, and so if you give something to somebody, it will be deemed as being a market value disposal.
When you get a cryptocurrency fork, so like Ethereum into Ethereum and Ethereum Classic, for example, and you end up with the same amount of both, then can you treat the lesser chain, so Ethereum Classic, as essentially a gift for tax purposes, or is there some other way of working out how you
Yeah, that's quite a difficult issue. If a currency undergoes some metamorphosis so that it changes into a different currency, have you disposed of it? I think it's the question you're asking. That is quite a difficult question.
How do you work out the cost basis for either? Because which one did you buy originally?
I mean, with the Bitcoin Cash and Bitcoin, you got a bunch of Bitcoin Cash, didn't you? But you kept your Bitcoin. Is that right? So was that Bitcoin Cash that you were given? I think potentially, you see, that would be a taxable receipt. Because you haven't paid anything for it, you just
appreciation.
But then you haven't disposed of it, either.
Well, no. I think what they might say is that there's something. There's part of the legislation that's called part disposals. So what you do is if you receive something for free because you own something else, you're viewed as part disposing the thing that you own in the first place, if you see what I mean. So a bit of the cost of what you originally acquired is set against the value of what it is you've received.
Even if it was totally involuntary.
Yeah. That's right. So because it happens with shares all the time, you know, shares. But with shares, there are specific rules which say that you don't recognise a disposal, but that only applies to shares. They roll over in effect.
Are you aware of any particular changes coming ahead with regards to HMRC, with regards to this evolving space to try to...
Which is why I said right at the start, I don't see it as a fork. You know, with derivatives, it was going to happen because they just couldn't cope with it. The legislation, it was like square peg round hole syndrome. They couldn't make the legislation work with derivatives. It just didn't. Whereas this stuff, everything I've gone through, a lot of the cases are hundreds of years old. They're just going to apply the precedents that were already there.
You said earlier that if you're trading, you can either be assessed on when you realise the asset, when you sell the asset, or market to market. Is that something that you choose to do?
Yeah,
is that
you can make
change that from year to year?
No, you can't change from year to year. Once you've done it, you've done it.
Right.
There's an election called the cash basis, and I can't remember what the threshold is, but it's if you're below, it's something like 150,000 quid. But I mean, it's quite high. You can elect for the cash basis.
I just want to run a scenario which I think a lot of people here would. It's like a really practical one.
Do you want to sit down?
Yeah, sure. So,
That's all right. Yeah.
so let's say you spend £1,000 to buy Bitcoin, and then you want to buy other crypto assets, it's like 1,000 of them.
Yeah.
But you can't go from fiat to other crypto assets, you can only go by Bitcoin mainly. So then you go, so it's not disposing, because you put in the £1,000, you bought Bitcoin, now you're using that £1,000 worth of Bitcoin to buy Sprouts, which has gone up like 3,000% today. But that's not disposing, because you've just gone straight there. So then this new thing is the asset.
It sort of is disposing, isn't it?
So the new asset is your asset, and then you would pay capital gains upon that disposal on a future day.
Well,
is that right?
I think you need to be careful. I think there's a chance that if you hop from one cryptocurrency to another, that could be viewed as a disposal of one and the acquisition of another, and therefore on your hop across you would be viewed as disposing of the asset.
Yeah, but if it's an immediate hop across, that's fine because there's no capital.
Oh yeah.
Gains.
If it's immediate, then it's the thing hasn't moved.
Yeah.
The problem is, the out currencies you have to buy Bitcoin to buy.
Exactly.
And
But
we
if
all
you
know
do
in
it-
the space of a few hours, it can be nothing. It's all happened. I know, like Hugh, when you got into it, I remember you phoning me up because you moved Bitcoin to another exchange and it was taking a few times. It dropped like $400. You were like,
Well, it happens, isn't it Ether, the one that most people use? It's more, it's more, it's got greater flexibility.
What would happen in the case where a trader made some profits on an exchange that is now defunct? So the records. What happens in the case of the records, because the records that were held on that exchange are now gone. So would an Excel spreadsheet would that suffice as legitimate records?
Has this theoretical person got the cash there, or got the Bitcoin, or got the? They haven't locked. Their records may have gone, but they've got the.
Yeah, say they exited before the exchange went down.
Yeah, then they'd be taxable on their profit. I mean,
but they wouldn't have a record of all the trades they made to make that profit. So would an Excel spreadsheet suffice?
Because I did quickly mention the fact that you have an obligation to keep records, and you have an obligation to keep sufficient records that the profit you've made is measurable. Now, in those circumstances, you, strictly speaking, are not complying with your statutory obligation. Now, in certain circumstances, HMRC will just say, well, that's not our problem, it's yours.
I think in some cases, though, an exchange goes down so rapidly that you can't really be blamed for the fact that you haven't got the data.
It's not a question of blame, it's a question of do you have the records or don't you?
So would your own, say you kept records on an Excel spreadsheet, would that be legitimate?
I mean, if that's the best you've got, that's what you've got to give them, and you have to explain the circumstances. Hopefully, you get an HMRC officer who is trading in Bitcoin.
I want some tips. I should imagine some of them wouldn't even know what it was.
No, it was reasonable, but the obligation to keep records is there. And generally speaking, they want third-party verifiable records. So it's a tough one. You just have to do what you can and negotiate with them. I have to say that, generally speaking, HMRC are a decent bunch of people who are reasonable and don't have a particularly pleasant job. So, they will generally be reasonable and understanding. But if you're coming it, then they understandably get quite cross. So, the best thing is to just be honest.
I guess my first main question actually is it? Do you think personally it's a good or a bad time to invest in Bitcoin?
Sorry, do I think
it's a good, like, is it a good time to invest say if a friend had a Bitcoin for sale, would now be a good time to buy one?
I've no idea.
Okay.
Good answer. Good answer.
Look at your Reuters screen.
And then my second question is, I did try and apply to set up a business, and they told me that it wasn't viable, I guess, on the grounds of working tax credits. Like they thought I was trying to claim working tax credits without having a viable business to warrant earning them. And then in the last year and a half, I've probably earned 10 grand a year, so like 15,000. You're saying that I get the impression I should now reapply, basically.
Yeah, totally. Yeah. You need to tell them. But I mean, do you have another job as well?
I have had other work.
Yeah. So you're going to be possibly above the personal allowance threshold. So you're going to be. So that income is potentially taxable.
Yeah.
Strictly speaking, you've got an obligation to notify them of chargeability. So.
Yeah. Okay.
What's your hourly rate, Liam?
My hourly rate is 200 quid an hour.
Right.
And that's 1 hour just talking.
And well, we got him for free this evening. And this space.
Yeah, and bear in mind, as I say, I wouldn't act on anything I've said because, I usually look stuff up before I give an answer, and also facts and circumstances that may not appear relevant actually can sometimes be very relevant. So, we would only give advice on knowing everything about the issue that we're being asked to advise on. So, I would sort of emphasise that.
Have you thought about buying Bitcoin yourself?
My wife won't let me.
Your personal opinion, do you think that this could have a big impact in the future?
Oh yeah, it's huge. I mean, I'm not sure about, I think blockchain technology is going to change the internet. The internet is just going to metamorphose from non-blockchain internet to blockchain internet.
When many people say this thing about blockchain?
Well, just because it's an encrypted internet. I mean, but the weird, it's going to apply to it, not just currencies. It's going to apply to everything. It's going to, because you don't need middlemen anymore. So you can just,
No
the only
bankers.
reason it applies to cryptocurrencies is because you need banks to keep ledgers. If you kick the banks out, if you can run a system of payments that doesn't rely on a bank to keep the ledger, then which is why the big banks are chucking so much money into the blockchain technology. They want to see if they can get there first.
Segue to.
But right now, Theresa May, yesterday came in the news, they're going to clamp down on all the internet. So if you want to watch porn, you're going to have to tell someone who's watching you watch porn.
Come on.
They're going to know you're watching porn because they know your IP address, and you can't cloak it because the VPN will be done for because you can't route it for anything. So in reality, it'll just be like 1984, won't it? Really, camera on your face and being told what to do. Isn't it?
Person of interest.
I mean, that's what they're doing, aren't they, with the laws? I mean, that's the next step.
I've just come back from China, and believe me, that is pretty impressive.
Wow.
They shut down WhatsApp in hours. Communist Party conference, we don't want any WhatsApp messages, it's gone. Amazing.
Did the same with Bitcoin, it bounced.
Bounced
up.
Yeah. There is going to be some interesting issues, isn't there, around what other countries do now.
I mean, what do you expect, really, insofar as the issuance of money is concerned? The state having the monopoly on the issuance of money, and then along comes Bitcoin and other cryptocurrencies, which actually challenges that whole matter with regards to actually running things. I mean, what's taxes for as well, the whole sort of thing. So you're going to see a lot more of it, but whether or not they'll succeed, I mean, people will come up with things, and there will be other workarounds and such. And I mean, in your profession as such, there must be now, you see what's happening, you mentioned blockchain just now, but there must be sort of a greater area of growth insofar as advising people on tax issues with regards to actually Bitcoin and other cryptocurrencies, for sure.
The biggest change in the tax system for a long time, probably years is coming in the next 2 years, and people don't even know it's going to happen, which is that businesses have to report their income quarterly to HMRC. It's called making tax digital, and account for tax on a real-time basis. It's going to be massive.
Is that for limited companies and sole traders?
Yeah, I think it's for businesses. It's for businesses, but it's going to make a massive change. And so businesses like ours are looking to use cloud-based technology to try and get the information in a format that HMRC are going to say is acceptable.
So they're going to have direct linking to your account, which they already do.
Well, no, they no, you have to report to them every quarter. So every quarter on a real-time basis, you actually have to send stuff to them that tells you what you've done in the last 3 months.
That's just like your VAT, like VAT is now.
Sorry?
It's like that's like VAT is now. You do that quarterly, so you have to
Yeah.
prepare some stuff every quarter. Anyway.
But individual, if you do your own self-assessment, that would still be annually.
Yeah,
As
for
an
individuals.
individual.
Yeah.
So it's nearly 9:15.
Yeah, well, people can
Can I ask one question? Say we had a friend overseas who just gifted us. How would we dispose of that Bitcoin that was gifted to us from overseas?
If somebody's given you Bitcoin, then that's fine.
Put it on the Christmas card list.
That's you've acquired an asset.
Up to how much?
Well, I mean, if somebody gives you something, it's not your problem, is it? It's their problem. So if somebody overseas gives you Bitcoin, you own an asset. It's like somebody overseas giving you a Picasso. You've got it.
So they've got to deal with the tax implications from the country.
Does this treat it as money laundering?
So you have to prove who gave it to you.
Yeah, money laundering is a whole.
Do you give advice on that?
As much as you can.
I don't personally, but I have to go through money laundering checks for any client I say that I have to run a money laundering check.
On the personal? You're advising?
But not just me, I mean every lawyer accountant in the country has part of it.
Can I ask a question? For example, if my relatives in China that bought properties for me, and eventually I sell it with money here, is that any tax implication?
Sorry, if they send you something.
I inherit properties in China.
Oh, you have properties in China?
Yeah. Pardon?
You have. Oh, right. People in China give you property in China.
Yeah.
Inherit.
Yeah.
I mean,
Are you a Chinese passport holder or a UK passport holder?
I have two.
Yeah. So do you know if you're UK domiciled or non-UK domiciled?
UK domicile.
If you're UK domiciled, then you're taxable on your worldwide profits and gains.
Pardon?
If you're UK domiciled, you're taxable on your worldwide gains. If you're not UK domiciled, you're taxed on a remittance basis, which means you'd only be taxed on the gains if you remitted the money to the UK. But if you're UK domiciled, then I think you're taxed.
What sort of tax would that be?
Capital gains tax.
Property disposal.
But not if it's an inheritance.
Yeah, it's just something.
What about being inherited?
Pardon?
What if it's inherited?
Well, but you said right. Have you said what happens if you sell it?
Yeah.
Yeah. Well, then you've made a charitable.
It's okay to have it. It's not okay to get money for it.
You're a tax lawyer, yeah.
What are the most beneficial passports to hold faces?
You're not allowed to take the money out.
That's a good question. That's a good question.
What's that?
Beneficial passport.
Well, no, there's books on it, whatever, and
Yeah.
there's different ones, isn't there? I mean, obviously Panama and Uruguay, different sorts of bits and everything, but it depends on, it's not just a passport, it's...
I don't have many of those.
You don't? Yeah, well, they would need to employ you, I think, you know, they make
In the most extreme case, what could governments do to try and block Bitcoin or...
Yeah, they make the rules.
So if they made it illegal, how would that affect their own terms of their own currencies?
Yeah, but she
get taxed on it.
They won't make it illegal. They know it. It'll never become illegal.
Yeah, so HMRC Bitcoin.
Pardon?
It's
That's it, yeah. You have to manage it.
Chinese laugh at me because it's taken so long to build a third runway. They just can't believe that the governments can't just say, I'll give you the value of your property, we're building a runway, that's it. The China's, you know, the Chinese just say they...
Just get on with it.
You know.
The government will do everything.
Well, I'm not criticising the Chinese government. It appears to me that because the Chinese government is doing something, it does it. And they're not, you know, it's not like a very common thing.